Paul Bloxham is there, HSBC's chief economist for Australia and New Zealand. Paul, what slowdown taking place in Australia? The news couldn't have been better through the course of the last 3 or 4 days, could it?
That's right, absolutely. Very strong data this week, and indeed we weren't expecting much of a slowdown ourselves. We've been quite bullish on the Aussie economy. We've been thinking that it's been in pretty good shape for quite some time now.
Absolutely, but I mean, you know, the interest rate cut, people suggesting that, well, we could have nearly another 100 basis points off by the end of the year. Surely that's now pure fantasy.
Well, again, we've never really expected that there'd be as many cuts as markets have been pricing recently. We have in mind that we might see another cut yet from the RBA, but really the RBA has gotten rates down a fair bit in the face of these growing global risks already. In part, they've been able to do that, of course, because inflation is quite low in Australia. So across the range of metrics, you've got a pretty good combination here. We've got low inflation, strong GDP growth, and close to full employment, and even the trade data today are looking a bit better.
Absolutely. I mean, it was quite narrow. I mean, 900 million was the forecast, I think. And we should bear in mind, this is pretty backward-looking. I mean, this is for April, isn't it?
Yeah, for sure, but if you look at the employment numbers we got yesterday, they were for May, so we had 39,000 jobs created in that month. If you look through the noise, you've got 25,000 jobs have been created per month for the first 5 months of this year. Add that to the fact that you've got GDP running at over 4%, 4.3% in the year to the first quarter, and it's a pretty solid amount of local momentum going into the second half of this year. Of course, the RBA has already cut rates 125 basis points since last November to deal with those potential global downside risks that are swelling.
Well, downside risks, of course, people say that of China at the moment, and what we had, of course, is that surprise interest rate cut yesterday or last night. And tell me just something, Paul. I mean, you know, it's the timing of that rate cut which has got some alarm bells ringing, because we've got a slew of data coming out over the weekend which could point to a marked slowdown when it comes to the economy there. And, of course, Australia is certainly not immune, being its biggest trade partner.
Absolutely not. And really the argument runs like this. The Reserve Bank could have sat still and kept its powder dry, ready for weaker conditions that might be around the corner, or it could have moved ahead of the game and tried to stay ahead of the curve. And invariably what happens is that second argument, the staying ahead of the curve argument, tends to win out, and we saw that happen on Tuesday, that the RBA cut rates given concerns about global risks.
What's the biggest concern for the RBA? I mean, it's still, of course, that fairly lopsided economy, or two-speed economy. How much of that is really at the moment responsible for the growth number that we're getting, and how much of the, you know, the retail side of things, the domestic slowdown when it comes to high street spending, how is that playing out? Look,
the national accounts, the GDP numbers gave us some clarity on that. We got a very strong contribution in the quarter from mining investment. In fact, the engineering construction numbers up over the year were up 53%. They're contributing around 2.5% to the 4.3% growth we saw over the year. But it's not just mining investment. The household consumption numbers were also fairly solid. So despite the fact that retail sales has not been particularly strong in recent months, the consumption numbers are fairly solid, and really what that's reflecting is households are spending on different things. They've been spending more on services, they've been spending more on international travel, and even the retail numbers in the national accounts look as though they're showing signs of improvement. So look, households have got strong income growth and they're fully employed. The economy's still in pretty good shape.
Yep, seems like it's full steam ahead there for the Aussie economy. Paul, thanks a lot for that. Have a great weekend. Paul Bloxham there from HSBC.